resistances, so forth, so forth. If I cough during the stream, apologies. I'm just maybe a little bit under the weather. If you're on TikTok, please join us on Twitch. I will not be reading anything from fucking TikTok. I am just going to be fucking talking into Twitch TV. This is a Twitch TV event. I think we're about ready to start. I think we got everybody that we want, and I don't want to do this longer than an hour. So, I think with that being said, let me just do something. So I know we're in the somewhere in the VOD. I know what to do. Okay, I see the piece of paper. That way I can cut the video. All right, guys. Thanks for tuning in. We are going to be turning subscriber chat. If you're watching this on YouTube or VOD, yo, what's up? Today we're going to be going over very basic stuff, but I think the basics is what is required. We'll be doing these type of videos and type of market analysis type stuff moving forward in the future. Maybe we'll do this like once a month or something like that. This will be available by VOD. And yeah, so the first and most important part when starting off on your charts and you're using TradingView, you don't have to use TradingView, but obviously TradingView is almost like the market standard. So when I start off with a new chart, the first thing that I like to do is figure out where I can have support resistance levels, just so the chart can be a little bit more clear. Because when you look at a chart like this, you're looking at this and you're like, yeah, you see things, but do you really see things, right? So on your tools over here, you can grab it, click on the horizontal line tool. And the first thing I always do is I try to look for, as I like to call it, areas, a battle area in the chart. This is where there's either a high amount of cluster of volume, and if you look at the bottom over here, these are the volume bars. You can see some areas are have more volume, and some areas don't have as much volume, right? So first thing I do, I take my horizontal line tool on this side, and I start, you can zoom in, whatever, and you always want to kind of hit the all-time high area. And as a note, as a preface to all these videos, I am a big fan of line of best fit. Some people will tell you, draw to the wick. Some people will say, no, you got to do it to the body. I'm more of a body I'm more of a body type of drawer, just because it really helps you kind of understand where the areas that touch the most. If you have a wick, and if we kind of like zoom in to the all-time high here, which wasn't a very big wick to begin with, the wick is just some poor soul, some poor sap, unfortunately getting trapped. There's probably not a lot of volume at the top. Maybe it's just a couple orders. So that's my reasoning behind taking more of a body approach to the candles rather than anything else. And then what we do is, after you take an all-time high, you kind of look at a recent low, throw it in there, and then you start looking for areas of battle. So areas of battle are usually going to be easily found with these little sections over here that kind of signify that there is either a high amount of volume or somewhere where the market kind of felt like it was a place of support or rejection, right? So we're going to just delete these quickly. If you don't know how to do that, Control Z. And we're going to just start drawing. Just don't care about, just aim for the parts where there's areas of battle, right? And then as you draw that more, and as you get into the habit of drawing these lines, it kind of, you'll see more and more when we draw these lines that it's usually not a coincidence. It's usually not a coincidence when you find these resistance support spots on the market. So even right now, right, when we started the stream, we didn't really see much, right? we didn't really know anything. We looked at it and we're like, what am I looking at, right? But now, right, we can draw more and kind of find more areas where we're trying to find. And then you can find other areas where we found support resistance, right? And you can kind of see like, oh, wow, in July 2021, and kind of comparing it to now, well, there is a reason why we're kind of finding this type of support area, because that was a major time. You can tell by the volume down here. You can tell by the kind of like V bottomy look it has. That, you know, that was a major area where people in the market felt like they should either defend, right? So it's not a surprise that in today's little market that we had a wick right over here. Sorry about that. We had a wick right here that went pretty much to 1767. And then today we're having a lot of battles around 1767 too. Now, just drawing on the daily doesn't do much, theoretically. You always want to zoom out, of course, right? Zoom out, babes, right? It's highly important to always zoom out. Like, you can look at the weekly, you can draw your support lines, but sometimes you want to look at the weekly chart right after, kind of zoom out, because you'll see things on the weekly that you would have never seen on the daily. So when we're zooming into here right now, there was a kind of a really major point that you would have not seen on the daily when you're kind of drawing it like this. You see it, but you don't see it until you really zoom out, right? So the biggest kind of indicator during this bull run was about 3,900, 3,970. And I'll tell you why. Well, the first time that we went to an all-time high over here back in May 2021, which was funny enough about a year ago. It's crazy how time flies. And if you're in Twitch chat, I just want to kind of have a quick reminder. It is in subscriber mode. We will be turning off subscriber mode sometime during the session, but at the beginning of the session, we just want to kind of make it subscriber mode to kind of give back or say thank you to the community that has been very kind and gifting. So I really appreciate you guys for always kind of giving subs and whatever. And if you're in TikTok, you got to come join us on Twitch. And if you're on YouTube watching the VOD, yeah, what's up? So going back to this, you can kind of see that the true all-time high during the May 2020, while it did wick up to, 43.80 or whatever, it really ended off on the weekly at pretty much 4K, right? So when we reached 4K the next time in about September 2020, we also denied that, which, once again, wasn't a coincidence. If you were just basing off of your chart, the daily chart, and if you're using the wick theory, right? The wicks people where I kind of said at the beginning of the stream, the wick is not where you want to be drawing. You really want, in my opinion, other people disagree around the world, technical analysis buffs, but I'm a big believer in the body of the candles, because when you see the body of the candles, you really see a different picture, right? This is just some poor sap getting jebaited up here, right? And that's why if you were in this part of the market around August, September 2021, you might have been thinking, this is going to push to the all-time high 43.81. Not true. Not true, because the real all-time high was 39.71, or 4,000 if you want to round it, but I like being a little bit accurate in this market, right? And what would have been a signal for you to kind of throw up a long, right? And this is just very basic shit, but like even the basic shit can really kind of give you an advantage. That people that don't do this or don't use technical analysis, and remember at the end of the day, technical analysis is gambling analysis. It is just a guesstimate, and you're hoping your guesstimate is correct, right? But what happened here, right? This was a major shift about the week of the October 18th, right? This would have not been visible October 18th back then on the daily charts, but what you would have really noticed here on the weekly, when this weekly candle closed above for the first time, in multiple months, and technically in history, This was the first time on the weekly when Ethereum went over 4,000. And when it went over 4,000 there, that was kind of a signal to be like, yo, easy long. Like, you could have just tossed up a long because you would have been confident enough that this, and I always look for multi-month trends too. Like, for multiple months, this was denying 4K, right? And that 1 week where it denied 4K, you could have, at the end of the week, even if it was 40.74, you could have longed it, and that would have been a very nice long from, 4,000 to 4,800, and not having to technically be super risky, kind of, throwing along and praying and hoping it works out, right? So that kind of, that little signal right there was a big thing, and there was a reason when we were, up here. You can kind of see on the weekly, like, the amount of time. Look at how many times that candle came really close to either breaking or holding that 39.71, because 39.71 was a critical part in the market for Ethereum at that point, right? So when it finally broke, I mean, it was definitely a bamboozly type area over here, the kind of the December area. But by then, you already know it was kind of bearish back then, right? By then, markets were already, Bitcoin was already falling from 60K, right? All of this stuff was already kind of telling you, like, hey, something's not right. Like, it's battling this, like, 4K area. And if you knew if it broke that 4K area, you could kind of assume that shit would not be good. And we're not even looking at RSIs, stochastic RSIs, anything like that. We're just purely basing this off what we have in front of our face right now. And we'll be getting into RSI, stochastic RSI. And I think I'll go a little bit into the Ichi clouds today, because you know how I love my Ichi clouds, right? When we finally cracked this area right here, about December 27th, right? That's kind of like the same signal that we had over here, right? When it cracked over here, you're like, all right, it's kind of bullish, right? And when we cracked over here, we're like, fuck, kind of bearish, right? So, with that being said, these are kind of the main things that you should look for when doing support resistances. And you can, like I said, you can find support resistances all over, right? And the reason why we're like a bit fucking bearish right now, and why this market can collapse, if you really want to look at it, and we're just drawing meme lines, right? We're drawing where's like heavy, nice support, right? And we can go to the daily and kind of come back to these areas right after. But it's pretty apparent that this area for ETH under 1,500, which also if we really go to another ETH chart really quickly, because unfortunately I'm charting on the perpetual futures chart. But if we go back to this weekly and we kind of draw this out and go to the old all-time high around this area, right? 1426 is pretty much what needs to hold. And well, look at that. Isn't that a crazy meme line over here back in March 2021, where we found that support and used that as a spring off to get to where we are today, right? So just by kind of looking at that, and even kind of even the areas right now, if we're kind of just doing our best to do a line of best fit here, this doesn't look good unless like next week is a full reversal. If we're being very honest, because if we're going back to our chart over here, and I will tell you a little lesson in a second why you should use certain types of data or not, but we can kind of see like this area right here there's a very big gap. There really isn't support. Like, you could say there's some support here and there, and there's going to be some small support, but it's not going to be very strong. So that's why I'm afraid of a free fall, because people, this doesn't look good if it continues falling, right? And one little thing that you should always keep in mind when choosing your data for charting is, when you're choosing your data for charting, always choose the exchange with the most amount of data, with the longest amount of data, right? Because if like how I chose at the beginning here, perpetual futures, I only have data till December 2019. But if you go to the regular Binance thing, well, we have data all the way from September 2017. And I'm sure if you go to another exchange like Bitfinex is one of the oldest exchanges in the game. And that's why when I do my long-term Bitcoin charting, I'm using Bitfinex because I'm getting data from, all the way back here, right? So important when you're charting, to always choose the ones with the most amount of data. Because if you don't, you might miss something or not see something that could play into your advantage, right? So the next thing that I like to really do, which I'm a big fan of, and you can do this either on the weekly, or you can do it on any time frames, and you might hear about it on my streams. I call them meme lines. They're really trend lines, and the trend lines for me are some of the most important parts of my technical analysis tools. If it's really you're either a person that believes in the meme lines, trend lines, or you're a person that doesn't. There's some people that don't use it. There's some people that do. I am one of the people that use it. And it's really as simple as finding a trend and being like, okay, if it breaks this trend, like the key is being able to connect 2 points at least. You want to connect at least 2 points. And then you want to stretch it out as far as you can, right? Because in the future, you don't want to be biased, right? You want to do your best to not be biased, okay? You want to do your best to not be biased. Always keep that in mind. Don't draw what your mind wants. Draw what the chart is giving you, okay? If you start drawing, if you're a bull and you start drawing in a bullish way, you might fuck yourself. If you're a bear and you start drawing in a bearish way, even though it shouldn't be bearish, you might fuck yourself. Don't fall victim for that, right? So you could draw this little trend line, and if you go down TradingView and if you go back to the daily, you'll it won't be a perfect translation, and then you'll have to kind of fix it up here. But you can kind of see, like, once we connected these two, right? You could just leave it like that, but the thing is, you just extend it, right? We extend it that way, and we do a line of best fit, and that's what I don't give a fuck about. Like I said earlier, I don't really give a fuck about perfect accuracy. I care about hitting as many data points as possible. As well, Crypto Diamond, thank you for the 5 gifted subs on Twitch. Appreciate it. So we can kind of say, or kind of like draw a theory off of this and be like, you know what? If this trend breaks, then this is probably going to go from bearish, right? Because this is a very strong trend bounce area from here, which had another strong trend bounce area here, meaning if the next time we kind of break that area over here, we might go into a little bit of a bearish fucking situation, which is exactly what happened, right? And this is exactly what we were charting on our TikToks months over months over months over months. The daily market updates, the weekly market updates. Markets move slow. That's another thing to remember and keep in your idea bank. The market doesn't move as fast as you want it to move. And the number 2, the market can remain irrational longer than you can remain solvent, meaning longer than you can have money. So what really was a very interesting point on the meme line here is when we did crack it right here, you can kind of see, and this does happen more than you think, where it looks like it wanted to break back into the trend. But if it does not break back into the trend, that is hella fucking bearish, bro. If it broke back into the trend, I guarantee you we would have seen $5,000-$6,000 Ethereum easy fucking peasy, right? And it's also important to try to also draw yourself interim trend lines, right? This is kind of like the main trend line. You need a big July bounce with the big September bounce, right? But what you could have also done is drawn an intermediary line right here when you started the little bull session right there, right? And it was like holding super hard, right? Let's try to draw it to the best that we can. We don't want to be biased. Never be biased, right? Oh, isn't that a surprise? The moment this candle broke right here, we started to go into a little bit of a shit show, right? And this is why I really, really love trend lines, because trend is your friend until it's not. And you could keep playing the trend until it's not your friend. and it's not your friend, you tell that guy to fuck off and you do something else, right? Basic. Okay? So, that's a little bit to do with trend lines. Now, there's obviously downward trend lines. You could say, you know what? If this wanted to be bullish, you know, when after hitting that top, you know, you could try to do your best and try to connect the meme lines. You know, you could have kind of done it like that. You know, this is, and then you can kind of start seeing. Let me just delete these old ones. I just don't want to get you guys confused. But I always keep them no matter what. No matter what, I keep my meme lines. You know why? Because eventually you can develop your chart into something like this. And I know it looks fucking crazy. Everybody sees it like, bro, how do you read that, bro? Whatever. You know, I use this for like low time frames, right? Because then I can see how it's spreading apart between the areas. Is it a coincidence that 28,925 is a very, very hard resistance area? No, right? So let's go back to the main chart, right? And, whoa, who do we got? We got Jeet with the gifted subs. Yo, I appreciate Jeet Cunedo. Much appreciated. And when you start drawing these lines, you start to see patterns form. And you'll see me on my Twitters and TikToks and whatever, talking about chart patterns. And chart patterns play out more than you think. And I know there's some people out there who fucking read their books and they're like, well, this one only plays out like 55% of the time, and it's not very accurate. Yeah, no shit. Everything in fucking crypto's 50-50, bro. It's technical analysis. Either goes up or either goes down. 50-50, right? But not really all the time, right? Also, it's important to know the trend is your friend, right? So if you do a very simple Google search for like chart patterns, and I'm just going to quickly bring it up on stream. You go to Google, type in chart patterns, there's infinite amount of these, right? You got ascending triangles, you got descending triangles, falling wedges, rising wedges. I think head and shoulders are bullshit, number one. A lot of people are like, yo, head and shoulders. And I'm like, yo, who gives a fuck? I think that one's a bullshit indicator because it's one of the easiest indicators to see. The easier the indicator, the worse it is, okay? Inverse head and shoulders, cup and handle. I never use it. I never look at it. It's super easy to try to look at almost any chart. And if you look hard enough, you can find any idea in your head, right? Well, the ones that are always kind of relatively true are stuff like descending triangles, ascending triangles, rising wedges, falling wedges. But it's kind of important to understand one thing. When people tell you like, oh yeah, it only plays out 55 or whatever percent of the time. No. If it's a bull market, the bullish indicators play out more. If it's a bear market, the bearish indicators play out more. If you have a bullish indicator, like let's say a falling wedge in a bear market, and I'll just quickly show you what a falling wedge is, which is this one right here, where you got kind of a down with a little bit of a bottom support, right? Those, if like we've seen in the past few weeks too, those don't play out as much because it's more bearish. If in a bull market, if you see a falling wedge, yo, play that every time, dude. Same thing with a bear market. You see a rising wedge in the bear market, boom, play it out. And we're gonna show you how many rising wedges there have been in the last little while that can help you out. Right, this one right here, if you don't see it, this one was a bit of a descending triangle. And a descending triangle kind of just like it finds an area, finds it. It's not always perfect, and you can look it up. You can type in the descending, I suck at spelling, descending triangle, right? You kind of have uno, dos, tres type of situation. Not always, it's not perfect. Sometimes it's uno, dos, 1, 2, right? But for the most part, you're trying to find that type of structure, right? And that can help you out, play it out. And I always say, just if you're new, just start drawing meme lines. It doesn't hurt to draw the meme lines. Draw as much as you can, connect as much as you can, draw them as far as you can, because they can really, really help you understand, are we bullish? Are we bearish, right? Look at this. I'm just extending this from these bottoms, right? Let's just zoom out. Let's just keep extending, right? Let's just keep extending here, right? Boom, 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 boom. Never fucking stop extending, right? Keep, as long as you're keeping true to this part, whatever happens afterwards, fuck it, right? Boom, boom, boom. And then this one, we can extend it even further, further, trying our best to kind of keep the line of best fit going. Also, Mex83 and Hubble, thank you for the gifted subs on Twitch. We're going to be turning off subscriber chat. We gave the subscribers a little subscriber chat right now. If you're on YouTube, hey, what's up? So, this is how you can kind of start developing areas. And I never remove them, right? Let me see if I can go to one of my, what is my other charts? Which one is it? Let's go to the daily here. Let's go there, right? I've been drawing these meme lines for ages. This is the Bitcoin meme lines, right? Straight from 68K. We extended it and extended it. Isn't it funny when we hit 49, 48K, that is exactly where we kind of denied it, like right off of here. I guess we can fix it up a little bit there. Remember, try not to be biased. Biased, no good, right? And look at that. We went, if we're just kind of following this, and excuse the messness for the people that don't understand what's happening here, but just try to zoom in on the candles. Forget about everything else in the background, right? You kind of had, it held in, it fell down here, found another support, denied off of that, went to the bottom, went into the third, like a third downtrend line, went up to the second downtrend line, found support at that other downtrend line, went to the top trend line, went to that middle trend line, went to this bottom trend, and look at that. This is a trend line that I drew months ago. Months ago, guys. We're talking ages ago. And look, how the fuck is that happening? Okay? How the F are we that accurate? Is it because market makers go to the meme lines? Maybe. Are we just lucky? Maybe. It is, after all, technical analysis, also known as gambling analysis, right? So that's why I really, when you really start doing this, draw the meme lines, keep the meme lines. Be aware of what's happening to you and your charts. Be aware of patterns that are forming. And sometimes, and right now we've only been looking at the daily, right? And as a note, I don't think I mentioned it, make sure your charts are on logarithmic. I like logarithmic. They've always been more accurate. They always feel more accurate. And I rather trade on logarithmic than not logarithmic, because it does change the way meme lines will look. And I always think logarithmic meme lines are way better, right? So going back to TA, let me see if we can see something good here. Sometimes you just have to zoom out and just start drawing. It doesn't mean you're going to be right, but you got to draw. You got to figure it out. You got to be like, fuck. Think of it, you're a detective in this shit. You got to detect the shit out of this market. And you sometimes, you know, I mean, you can have your meme lines predetermined or whatever, but look at this. Isn't this interesting? Actually, this is fucking hella bearish, right? Look at this. We're talking September 2020 support. We're talking January 2022 support, where we found kind of like an interim bottom after the big dump, right? So right now, we're quite underneath this meme line. It doesn't mean we can't return to this meme line, because we can always kind of look at this and be like, ah, yes, there's kind of heavy support here. But if we start falling off of that heavy support, you know, we could start seeing a really big fall off, right? So if we kind of extend this a little bit further, right? And you can, it's always interesting to see when you zoom in and you see the meme line break, and there's always a big candle, and it's just like, damn, it's just like, okay, I think this is, you know, that kind of gives you that kind of confidence to be like, you know what, this is a real meme line, right? So, you know, it's possible that maybe we see a chop down quickly to 1400, and then everyone's like, oh, fuck, it's terribly bearish, and then, like, you know, has a little bounce back up. People are like, yeah, it's bullish, back to, like, 1600, or maybe even goes to 2100. People are like, yeah, we're back in. And they're like, no, we're not, right? So always try to theorize what could happen and what could not happen, and at least have a reason why something could happen, right? And, you know, this is more of a kind of a trading mentality. But it's important to know the possibilities that can happen, because there's only so many possibilities that can happen, right? Market can go up, down, or sideways. 3 possibilities, always and forever, right? So, you know, it's always based, I mean, at the end of the day, the market moves off of Bitcoin, right? Bitcoin is daddy, king Bitcoin. he's the one that's going to be moving the market, or it's. Um, so always keep that in mind. Yes, we're charting Ethereum, but at the end of the day, if Daddy Bitcoin says we're going down, then Daddy Bitcoin, we're going down, right? No ifs, ands, or about it. Especially the other shitcoins, right? Ethereum is it's still a shit, it's not a shitcoin, it's it's a half shitcoin. I can't really put an explanation. I believe every coin in this market is a shitcoin. Chainlink, even nothing, until you're top two, you're nothing in this market. In all honesty, you are a coin flip, right? And that's something you should always kind of keep in mind. What time is it? It's 5:21. Okay, we can start getting into RSI a little bit. So, long story short, try to find the patterns, and especially on the low time frames. On the low time frames, you're going to see it even, not clear, but you're going to see things that you didn't see on the daily, right? And you're going to be able to see, if we go to the daily right now, we can kind of see that, this could be a descending triangle, right? But if we go to the 4 hour and we kind of zoom out, we can kind of see it a little bit clearer and be like, okay, this could be either a descending triangle, or it could be still kind of a bearish box, right? I'm going to delete some of these lines to just kind of make it seem what it is, but we can kind of see okay, it's broken out of this range that we had. So even beforehand, if you're wondering oh fuck, what's going to happen to the market, you would know that once it cracked below 1928 plus or minus, right, line of best fit, that something would happen. And if you don't know what a bearish box is, we've been talking about it on our Twitter. If you're not following our Twitter, make sure to follow our Twitter. Bearish box, right, which is essentially this, where you get a big decrease, a rectangular consolidation with a continuation down, right? And it was more visible on Bitcoin. Ethereum has been a little bit more bearish in the last 2 or 3 weeks, right? Ethereum's been a little bit bearish in the last few weeks, because if we go to Bitcoin right now, let's just kind of go to Bitcoin because we haven't charted it. This was pretty much a perfect bearish box, right? I'm a big fan of, once again, line of best fit, and we almost broke out of it on the last 4 hour. But wouldn't you believe that they goddamn defended it again? So we're gonna have to see if they can play it out on this 4 hour, right? And I do like the 4 hours, and if you see on top of my chart, these are the time frames that I do like the most: the 2 minute, the 3 minute, the 5, 9, 10, 15, 22, 30, 35, 70. I don't use that much. It's just the double of the 35. 1, 2, 3, 4 hour daily. I also have a hell of others that I look at. I'm a big fan of the 2 day, 3 day, 4 day. The 2 day, 3 day are really important. 4 or 5 days, The 6 day, not really necessary, just for the memes, really. But you can kind of see, you can really start developing ideas and seeing, okay, if it breaks, if it doesn't break, right? And these areas in the market are always the toughest to play, because it's a consolidation range, aka a crab range. So there's 3 types of markets, never forget. There is a bull market, there is a bear market, and there's a crab market. Obviously, in the greatest scheme of things, we're in a bear market right now. But when you go to the 4 hour, right, you got to put yourself into the 4 hour mindset. Then, you can kind of see we are crabbing sideways, right? So when this happens, you do have to be careful, because if you decide, okay, if it breaks here, I'm going to short it. Well, you can kind of see what's happened in the last few days, where people think they're going to win, and it's actually just the market makers just saying, ha, thanks for the money. Thanks for playing, pretty much, right? So now I think I've kind of gone over charts, trend lines, support, resistance, meme lines, whatever you want to call it. So we're going to start moving into, a little bit, adding a little bit of extra indicators. Even though this is, like I said, look at this, just off of this, you can really, really see how the market kind of moves. You can kind of see this is where we find resistances. We've denied here. People, this is a psychological game. Is this recorded? Yes, it will be recorded, uploaded to Twitch, VODs, and on YouTube tomorrow. So you can really, it's important to split the market into the areas so you can kind of understand where could we go next, where do we find support resistances, and all that stuff, right? So next up, we're going to kind of go into some indicators. Indicators are a little bit harder to use because it kind of requires experience. It requires you to, if more than anything, in this game of TA, if you don't believe in yourself, you will never do it. If you don't have confidence in yourself, you will not do it. If you don't have just that little slight, I wouldn't call it a gamble in you, but that ability to, do it, click the button, right? At the end of the day, you control your own outcome. You click the button. You make the decision. This is a one-on-one game. You can think that you're playing against the market, but the market is a one-person entity. Okay? You are playing against one other person. Okay? That's it. And the most important thing that you need to really realize about this market is if you don't have that confidence, if you don't have that belief in yourself, this will not be a good journey for you, and you probably shouldn't do it. And I always kind of say, I know this is kind of getting into trading now more than technical analysis, but if you're starting off new and you're like, yeah, I want to do this, I want to blah blah blah, hold your horses, guys. This is a journey. This is your own personal journey. And people, I always say, if you can't turn $50 into $500, if you upload $5,000, you're gonna turn that into zero. Okay? If you can't turn $50 into 500, you're not turning 5,000 into something more, because you need to be able to gain statistics on yourself. In poker, and I come from a poker background, and I think poker is poker and trading is very similar. Risk analysis, risk everything, right? Money management, mental management, all of it's here. All of it is here, just like in poker. And you really need to be able to understand you. So you got to have a trading journal. Understand what makes you do bad things. What's your win rate? What are your biggest mistakes? How do you fix those mistakes? Is it a mental mistake? Is it a technical analysis mistake? Is it not believing in you mistake? Right? And when you start to see that you're really just playing against yourself at the end of the day. And that's really important to keep in mind. So if you are starting trading and you're looking, well, I want to do it, start with a low amount of money. Whatever the fuck that is to you. And ideally not a lot of money. We're talking like $50, $10. Because what does it matter, right? If you're bad, you're bad. And either way, you're going to lose money. So why do you want to lose more money? Yes, it's more exciting to make a bet. It's like, ooh, I made $1,000 today. Oh, but then you're sad tomorrow because you lost $2. All right? And that's that. Before I get into technical analysis, that is one thing that you need to keep in mind, right? You need to be able to split your investing portfolio, something that you keep on a hard wallet or MetaMask or wherever the fuck you keep it, and you say, I'm never touching those funds. That is my investment fund. And then you need to, and if you want to get into trading or TA or whatever, then you need to have a trading portfolio. Because that's the biggest mistake people make at the beginning. They just have one big fucking portfolio, and they like keep draining from their portfolio while they keep losing money. They're like, oh fuck, I'll just sell this, I'll just sell that NFT, right? No. Whatever amount of money you decide after you've done your TA training, right? Because you got to start off with something, a little bit of something. Whatever amount of money that you choose to play with later on, just have this mentality of that is the only money that you can use for trading. If you have the mentality of, oh, I'll just reload, bro. I'll just if I lose this 2K, I'm just going to upload another 2K. That is a losing mindset. I guarantee you, you will lose. If you're already going into the fucking mindset, you're walking into the game, you're walking into the casino, you're like, yeah, whatever, if I lose 2K, I'll take another 2K out of the bank. No. That 2K is your life support. Whatever, 1K, $100. I don't give a fuck how much money. Okay? Because if you lose and you're like, I'll just reload, then you're a loser. Not a winner. Okay? That's some Tate mentality there a little bit. But like seriously, if you're not winning, then you're losing. Right? And if you're losing, well, that's not what we're here for, right? How long should you be training? Until you're confident in yourself. Until you know that you believe in yourself. And honestly, it should be a little while. 6 months, 7 months, 8 months potentially. I don't know. Some people are better than others. Some people are worse. It's tough to say, right? It's person to person. It's a personal journey, right? Because you also want to experience different types of markets, right? Because if you look at it from a perspective of like, if you look at it from a perspective like, hey, let me see. Hold up. I want to get my train of thought right. You got to see all parts of the market. Because if you just, like right now, you're training yourself in a fucking bear market, right? But what if it flips bullish and you'll be trained into the bull market, into the bear market, you'll be like, short, that, right? But then the moment the gears switch and you don't know what happens when gears switch, right? You know, stochastic RSIs bottom out or whatever. Then you'll get pretty fucked up. So something to keep in mind. All right, let's get into some indicators. RSI, stochastic RSI, my favorite ones. They're cool little beans. So if you go into remember this is TradingView. Go to the indicators top here. You type in RSI. They have like this new version of the RSI with some SMA line. I don't give a fuck about it. I can just go immediately and remove it. Fuck that. I don't give a fuck. All right. And I'm not going to get into my RSI theory today. We'll do that on the next session because the RSI theory is pretty deep. Honestly, we should probably I'll just have a separate lesson on my RSI theory. I've developed a strategy over the past 3 years that is very accurate, and it really tries to explain to you health of the RSI. But let's just go over the basics of RSI and how RSI can help you. And as well, we'll add the stochastic RSI, which is, I like to use him. He's like a friend of the RSI, is what I like to say. A little friend, a little checkup. Both are calculated a little bit differently. Obviously, the one stochastic RSI at the bottom, this is a oscillating RSI, and this one is just more based off of the price. You can Google the calculations. I'm not going to get into that right now. Fuck the calculations anyway. All that matters is the program does it for you. I mean, it's kind of nice to know the theory behind it, but, it is what it is. Hold up. I just want to double check one of my positions. Okay, we're good. Okay. So, RSI, what does it mean? And stochastic RSI, what does it mean? RSI, Relative Strength Index. For me, this is one of the most important indicators for me because it's trying to literally tell you how the market has been feeling. And in general, RSI above 50 is bullish. RSI below 50 is bearish. Don't. We'll go into it in the future. Fuck that theory right there. That 50 shit, that's in the textbooks. Nobody develops RSI. We developed RSI. Tune in for the next episode where we fucking break down RSI like nobody ever has. Okay? But theoretically, from the textbooks, 50 above bullish, below 50 bearish. But it's kind of bullshit because if you think about it, what 51 RSI is bullish, 47 RSI is bearish? You got to give it a little bit of range, but we'll discuss that next time. If it's above 70, this white line over here, it is regarded as overbought. If it's below 30, it is regarded as oversold, right? And it's not, I wouldn't say this as and this is where it gets tough with technical analysis and where you have to kind of be like a little bit experienced, a little bit of, you can't just kind of go into it, what I'm about to say, and be like, oh yeah, I'm going to kill it right now. Boom. That's what the textbook says. This is a fickle game, technical analysis. It is there's a lot of variables in this. You got to think about what's happening in the real world, what's happening in the market. Is there heavy resistance areas or support areas that are being broken? So where we're looking at the RSI right here, right? In theory, when RSI is really, really low, and what I really like to do with RSI, immediately we go to the daily. We zoom out. We zoom the fuck out. And we start drawing meme lines where we've seen either high bottoms or high tops right away. Just like we did with the chart above. Do not relatively the same to the chart, and we'll go over it, but get the highs, get the lows, get areas where like generally it can bounce, right? Because it's all energy. RSI is energy, what the market is feeling, the true energy of the market. You can kind of tell. Let me just kind of make this a little bit thicker. And if you want to know how to do it yourself, you're kind of seeing it right now. You click on the settings button, and then we can click on this. We make it a little bit thicker just because it's a little bit better, a little bit more visible. I'm a big fan of the thicker lines. I like the thickness. And yeah, and for questions about trading and whatever, we'll be taking it after the session in about 20 minutes or something like that. I'll explain RSI, stochastic RSI, and I think we'll end it at that. And maybe we'll do quickly Ichi clouds. Ichi clouds are easy, so we'll kind of mention that at the end. But going back to RSI lines, right? You really want to kind of see like where do these RSIs really go? How far does it go down, right? Because theoretically, when it's really oversold, that's when you don't want to sell. Because that's when the market's like really like, oh man, this is like really bad and I gotta like sell out a loss or whatever, right? My general theory in life is you don't really want to sell when it's oversold. That just doesn't work out most of the time. If you sold here at oversold, it can always go lower, right? But that's why you have to use kind of the past history to your advantage to try to see, where it could bounce. And then that's how after this, we'll kind of go into the lower time frame, like the 4 hour, just to kind of slowly understand, what's happening with the asset. So let's kind of continue. And this is where I'm going to kind of bring in stochastic RSI, because we haven't talked about stochastic RSI yet. So stochastic RSI, how do I use that to my advantage? I use stochastic RSI to my advantage very, very easily. And we'll go over stochastic RSI right now. And stochastic RSI in general, at least on the daily, not necessarily on the lower time frames, but on the daily and the weekly and above, that's when it's going to be the oscillating numbers that it really hits is between 100 and 0. Our stochastic RSI cannot go higher than 100, and stochastic RSI cannot go lower than 0. Even though on the chart you can technically draw it in the negatives, but it physically can't, right? So how I use stochastic RSI to my advantage, and we'll go a little bit deeper into stochastic RSI on the next session. But when stochastic RSI goes over 80, which is kind of like this, over 70, when it goes over 80, that is regarded as overbought. If it goes below, 20 over here, then it's, did I say overbought? I said overbought, right? When it goes below 20, it goes oversold, right? So when and especially kind of how we've seen in the past few days, or even Bitcoin, we'll show you Bitcoin right after, if the stochastic RSI is getting overbought and the RSI is not even close to being overbought, we're talking right here, it denied pretty much off of 37 RSI, all the way from this 30 RSI to all the way to 100 stochastic RSI. This moved like what? 10 points or something like that, 25 to, a little bit of 13, 14 points, right? That's not a lot. When it's more of a bull market, right? Or not a bull market, but a bullish session of some sort, right? Doesn't necessarily need to be a bull market, just has to be bullish. You can kind of see like, when the RSI was here at 36 or whatever, and the stochastic was kind of hovering above that oversold area at 20, when we went from 42 to 70 RSI, right? Look at the difference in the points, right? That was, you can see it. And then this is also when I start drawing trend lines in my RSI, just like we drew trend lines in the regular, hold up, I just want to do something very quickly. In the regular, hold up, I just need to send a text. Sorry about that, guys. I'm going out tonight. Just have to respond to some people. Right? You can kind of see. Remember how we were drawing trend lines before at the beginning of the stream, right? And we're doing our best to do a line of best fit. And then you can draw it on the RSI too, right? And when the RSI trend line breaks right here, look at that, guys. Look what happens. Look what happens when you kind of put it together, right? You can kind of see when there was a trend line break, that, that was the kind of main area right there where you could have kind of maybe opened up a short or thought about opening up a short. And, you can kind of use the stochastic RSI. We'll go into it a little bit deeper on the next stream, kind of understanding a bullish stochastic RSI and a bearish stochastic RSI, because bullish and bearish stochastic RSIs play a little bit differently, especially in the different types of markets you are. And that's where a lot of this kind of you can't just kind of read a book or listen to this lesson right now and think you're going to be some kind of, TA god of some sort, right? You're going to have to look at different situations and see how they played out in that bullish situation. How did it play out in that bearish situation, right? And we're not even taking into consideration the fundamentals. Was there something announced? Was there a bullish announcement? Was there, did Elon Musk tweet that Bitcoin was going to be used by by Tesla or something like that, right? So not only, looking at technical analysis is great and all, but you really have to try to figure out how to mix in the fundamentals in the world and try to understand, is there a reason that this is pumping because of fundamentals, or is this a reason that it's pumping because of just pure technicals, right? And for the most part in 2022, just like I said at the beginning of the year, technical analysis is cool and all, but at the end of the day, what's been moving the markets? It has been the fundamentals of the market, Russia's and inflations and, oil, gold, all that stuff has been affecting the market, which has also been affecting the TA, right? So, moving back to kind of Bitcoin and kind of what we're looking on the daily here, right? The daily, this is kind of like the same thing that we saw here too, right? Especially in the bear trends, this plays out way, way more, right? If we kind of drew a trend line, right? If we knew this point, and not where we are right now, right? We would have drawn this trend line over here. We would have seen, hey, the stochastic RSI was topping out. We knew that you can't always time the market perfectly, but you know that sometime soon there's going to be a movement because it is so overbought on the stochastic RSI, and the RSI isn't showing that strength. And another thing you can do to kind of help yourself too, always go to the weekly and try to draw RSI trend lines too. You can kind of see the market was the most excited ever, right? And that you can tell by the RSI, man. You can literally look at the RSI and it will tell you how fucking bullish are the people, okay? When we reached the most bullish, think about this, and this is why 40K was also a very important area. The most bullish that the market fucking was was Bitcoin hit 40K for the first time. And look at the stochastic RSI. When it's a very bullish time, stochastic RSIs can elongate for even up to 7 candles. And that's kind of like a little trick of mine that I like to use. A very, very high percentage of the time, about like 95% of the time, the stochastic RSI, pretty much on any time frame, will not extend usually more than 7 candles for the most part, unless it is a very, very, very bullish period. And the longer it goes, the worse it kind of is, right? But this was a whole different market. Remember, we're going to have to explain bullish and bearish stochastic RSIs on the next stream, because I could literally talk about this for like 6 hours straight, which I'm not going to. But the RSI here was the peak. And think about that. The peak RSI was at 40K. And then the next time we saw an all-time high of like 68, 69K, do you see that? The RSI denied off 70. People weren't... 7 candles, doesn't matter the time frame. For the person in chat. Look how crazy this was up here when we denied that new all-time high. Everyone was like, oh yeah, we're going to 100K, we're going to that. And I'm just sitting there on Twitter or on TikTok, and I'm just like, yo guys, you guys aren't serious, right? Because when the most bullish people were, the most bullish that people were were at 40K, and you can literally see that people were way more bearish, not maybe bearish, but way less bullish at 69K, right? And if we go to the daily and we kind of zoom out and kind of fix this meme line, let's kind of do a little trend analysis here very quick, okay? Right? We can see, like right here, January 2021 was the peak of the bull market right over there. You could draw a little, that was the intermediary trend line. And that's when I came onto TikTok. Because I was like, everybody on TikTok around this period was like hella bullish. They're like, to the moon, to the 200K, to this and that. And like, you guys can literally see, and this is what you don't want to see, a higher price, but, and I guess that's not the right way to draw it, a higher price, but a lower RSI. Every time the price was going higher, the people in the market were like, yeah, I'm interested, but like, just because the price is going up doesn't mean it's the same bullishness as you think it is. The RSI was literally telling you 40K the highest. The next time we hit an all-time high, less interest. The next all-time high, less interest. The next all-time high, less interest. The next, the next little bounce after the drop, even less interest. And that's how you got into a very bearish situation over here, right? And then look what happened when we broke that trend line over there. Look at that. Look at that. That trend break, you could have waited like a day or two to kind of make sure you weren't getting fucked. And then boom, market went up. Easy peasy, right? And you could have even drawn a little like a line of best fit over here. Yes, there was this little, you could say like, oh, but why aren't you drawing to like this point? Because we had point 1, point 2. Sometimes you can have a fake breakout. Sometimes you can have a fake breakout. Is RSI like momentum? Not really, but a little bit. But no. So same thing happened after that, right? If you want to even keep drawing kind of further, right, you can kind of try to connect other times, right? And kind of like when we hit all-time highs, when we hit the first all-time high at 66K, it was a little bit bullish. But then when we hit 69K, how can you say that the market is fucking bullish and we're going to fucking 100K, 200K, when literally right here they told you 66K was more bullish than 69K. And after that, it was a total fucking megatonic shit show, right? Just a fucking megatonic fucking shit show. Fucking RSI meme lines all across the board, right? It really pays to kind of draw these meme lines because it gives you an advantage, just a small advantage. It's not a big advantage, but it can help you kind of learn a little bit more, okay? So that's what I wanted to say. So higher price, lower RSI, bearish indicator. It's telling you that something is not right. If it's bullish, it should be getting more and higher all-time highs, or at least going to above 70. Like, how can you say that at 69K we were hella bullish when it wasn't even willing to go to 70 RSI? It wasn't willing to be overbought, because when something goes overbought, it kind of creates people, or kind of creates a situation where you want to be like, you want to see the bullishness. You want to see people buying overbought, because that kind of tells people as well that's where they're really interested. And if they're not interested, then like, what the fuck are we going to do about it, right? So I think that's good for the first lesson. What I'm going to do quickly is I am going to cut the stream for a second just so I can use this as a cutoff point. We'll turn the stream right back on. And then I'll take questions. We'll do some TA because we gotta look at the charts right now. So, YouTube, thanks for tuning in. VOD people, thanks for watching. Let me return on the stream right now.